what's the fastest way to grow a property management business? In my opinion, is to acquire another property management business. And you can actually purchase these companies for relatively cheap because you're buying them based on revenue. And you're basically buying just the contracts, right? Because if I have the infrastructure and I have the employees and I have everything that I need to service the contracts, really all I need is the contracts, and I don't need any of the overhead from the prior company. So basically I'm buying revenue. And when you're buying revenue, it's actually very easy to finance when you have zero overhead to account for.
Welcome to the Exceptional Companies Podcast, a podcast for purpose-led entrepreneurs looking to master the art of buying, selling, or optimizing small businesses. Your host, Chris Seegers, founder of Exceptional Companies and author of Selling Main Street, has over a decade of experience starting, buying, and leading successful businesses. He's here to guide you through the complex world of business transactions and growth. Each week, we dive deep with actionable insights, expert interviews, and real-world strategies to activate and equip you to live exceptionally and build exceptional businesses. Now, let's dive into today's episode. Here's your host, Chris Seegers.
Welcome to the Exceptional Companies Podcast, where we discuss how to buy, sell, and optimize your business. I'm your host, Chris Seegers, and I've got an awesome guest and friend, Carlos Rovira. Welcome to the show, brother.
What's up, Chris?
It's been a long
time. Happy to reconnect.
I know, man. It's great to reconnect. It's been, I don't know, probably like a year since we've really dug in. So I'm super excited. I always start a little like my view of the guest, but Carlos is just an awesome dude, like deeply authentic. We connected through a mastermind that I'm no longer a part of, he's still part of. And we built some really good friendships. They've come out to Colorado to visit us. We've gone out and seen them. And he's massively successful in real estate. He owns his own business, but he also has just a wonderful family. And I really love his devotion to his family and his faith. He also never stops learning. Every time I talk to him, he's always trying something new or buying something new. And so we're going to talk a little bit about how Carlos transitioned from initially investing in single family real estate into commercial real estate, raising capital, buying businesses. So Carlos, let's start there. Tell us a bit about your story. And you said you wanted to jump ahead because you've got just a phenomenal story, but it's probably like a 2-hour-long podcast. But take us where you want to take us, man.
So yeah, historically, I'm a real estate investor. So I started off, like most people, buying small multi-family duplexes, family homes. Little by little, kind of traded up. Most recently, we've been buying shopping centers in Kansas City, Missouri. Also looking for shopping centers down in South Florida, where I'm based out of.
Okay, so let's stop there because that's like a big transition. So you're buying single family homes and you're doing the monopoly game where you're like, all right, I'm going to trade up to something else. How did you start that mindset? Because a lot of people do get stuck with a couple SFRs and then that's it. And 10 years later, they're still there. So how did you transition and kind of say, hey, I do want to play bigger?
So what happens is that single family homes, they're easy, right? So it's the lowest barrier to entry as an investor. So it's easy to get kind of stuck there. The biggest issue is that the margins are very low. So if you're a cash flow investor, you're basically one HVAC repair away from negative cash flow on any.
Interesting.
Property. So you can buy them turnkey and be perfect. They can be perfect for 2 years. And then that wear and tear starts to kick in and things start to break and they start to become a lot less profitable, which is essentially what started happening with my portfolio. I would buy these properties, it'd be brand new. They'd have a brand new tenant in. They'd cash flow great for a year or two. Then year 3 comes along, you have that vacancy, the person leaves, the place is trashed, you have a huge turn cost, and then the expenses start to mount. And what happened to me is that this cycle started to sort of materialize around the time when the pandemic was coming down and prices of real estate had shot up. So my equity was so much more than when I bought the properties, and my return on equity was a lot less than my return on initial capital, especially when you had all of these maintenance requests and things that were kind of basically putting me out of the game. So I made the decision to just start selling. I mean, it was stupid not to sell. The prices of real estate had gone up so much. I would like double and triple my money in some cases. And it was better to just rinse and repeat. The problem is that when prices are up and you're selling something at a very high price, now you have to trade it for something else that's going to be the same price, right? So you can't even make a lateral move because you're basically just trading one asset for another and you're not really doing anything to grow the wealth in the portfolio. So it was a natural sort of next step to look into larger asset classes. And we started looking in multifamily, in the larger multifamily space. But again, prices were so high, we just couldn't make anything pencil out. And in the middle of the pandemic, I mean, I'm talking 2021, 2022, the most distressed real estate was office. People were working from home. So there were so many office buildings that were just like 100% vacant. So that was kind of an opportunity that we saw and we jumped on. So we bought a couple of office buildings in 2021, 2022, and then that led to buying a shopping center. We were just trading houses, and then I would make an investment in a larger property, and we'd have partners. So we'd syndicate some of these, friends and family. I found a partner as well who would help me raise money. So we sort of tried to like kind of trade up. And now I'm of the mindset that every deal I do has to be bigger than the last. Scary, right? Because you get so used to doing one thing, and then the next thing is so much more. Really, it's the same thing. You're just dealing with a lot more money. But yeah, it's a scary place to be. But as entrepreneurs, I think we kind of thrive on that sort of anxiety, for lack of a better term, like
growth, right? Constant growth. Yeah, 100%. So let me ask you a question on that. So there was a lot of investors that owned real estate during this period and didn't sell based on loss aversion bias. So it's like, all right, if my property's worth $250,000 and I sell it, what if it runs to 400,000 or $500,000? How'd you deal with that? Was it just, hey, I'm just going to make a conscious decision and we're rolling, or like, because I know people struggle with that.
Where I struggle is in the, man, I have all this equity. Now when I sell, I'm going to have to pay all this tax, right? The government is going to take half of all of my hard work. If you're not trading up, or if you're not trading with a different property, either doing a 1031 exchange or doing a property cost seg, you're losing money by selling. So you might as well just hold if you're not going to trade into something else and do it in a tax efficient way. So that's the anxiety that I get when I sell. It's not like, yay, I'm going to have all this money. It's, damn it, I'm going to have this huge tax bill. Even once I get the money in the bank, until I've found the replacement property and I have figured out the tax efficient way to do it, I don't sleep well at night. And that forces me to continue buying and trading up.
Yep. 100%. Yeah. We've got a property right now. We have a ton of equity in, and we're looking for that next thing, because that exact mindset is like, we have way too much capital tied into this, but I am so misaligned with the core values of our government right now. I'm like, I don't want you to have one penny not even one penny. Yeah. So I'm like, we will wait until we can do a 1031 exchange, and we're going to find that property first. And even if the timing isn't perfect and we miss it by a bit, we've still saved 40 to 50%. That's awesome, man. So you start raising some capital, buying commercial buildings. Talk to us about, you started a property management company, and then it sounded like you bought one. So walk us through a little bit of the business ownership, because, real estate investing, like you said, is the lowest barrier to entry. And often it's not running a business. It's like you and your wife, or you and a buddy, you got a couple properties, you're running it, but you don't have employees, you don't have processes. So that was probably a pretty big step, I would guess, to kind of transition into business ownership. So talk a little bit about that.
Yes. So I've always been vertically integrated. I've always had property management. Very few times where I've hired third-party managers, I've been screwed over, I've been burned. So I have this trauma where I need to be the one, my company needs to be the one that manages every asset that I own. But the problem is, like you said, it's a very low margin business. So as you scale up and you build a team, you have to have economies of scale, right? So if I'm going to hire a full-time employee or 2 or 3 full-time employees, I have to have enough properties generating enough revenue to be able to support that. What was happening is that we got to a point where we had 3, 4, 5, 6 buildings under management. So there's the real estate, taking money as cash flows as the owners, but then there's the property management company generating fees from the management of the properties. It's operating at a very low margin. It's basically break even. If you sell one property, now all of a sudden you can't pay your employees, right? Because you just lost property management fees from a property. Even though you as the investor, taking in capital or getting your equity back, you lose that cash flow that feeds the machine. So I would find myself in this situation where it would make sense to sell a property, but I'd be like holding back because, man, if I sell one building, I'm going to have to fire so-and-so. So if you don't have enough scale on the property management business, it's hard to find deals, right? Like if I sell a building, there's no guarantee I'm going to replace it with another building tomorrow, right?
Right.
My underwriting is very strict and we're pretty conservative in terms of what we buy. So the natural solution to that, at least for me, was to grow the property management company beyond just servicing our own portfolio because that would give us the scale. I can add more units from other investors that need property management, and that will provide a lot more cash flow. And I can scale that a lot quicker because it's easier to close a property management client than to close a shopping center deal.
Yeah. So you turn kind of an expense on your P&L to a profit center, or at least a break even.
Now, what's the fastest way to grow a property management business? In my opinion, is to acquire another property management business. And you can actually purchase these companies for relatively cheap because you're buying them based on revenue, and you're basically buying just the contracts, right? Because if I have the infrastructure and I have the employees and I have everything that I need to service the contracts, really all I need is the contracts, and I don't need any of the overhead from the prior company. So basically, I'm buying revenue. And when you're buying revenue, it's actually very easy to finance when you have zero overhead to account for. So I was able to get really good financing. I found this deal in Orlando. So I actually expanded. I'm in South Florida, and I expanded into the Orlando market by acquiring a small mom and pop property management company that had about 120 doors.
Nice.
So we took in 120 doors all in one shot, rather than me having to grind and pick up one unit at a time, 2 units at a time, 3, 4, 5. We were able to just add 120 units, which is about 250,000 in revenue, top line revenue added just immediately to the bottom line because I didn't have to really add any overhead.
I love that. I just did a talk at a local mastermind, and the talk was about growing sales. And so I talked about some just basic ways of growing sales using scorecards and accountability in your existing business. But then the second, which is what we do, is growth by acquisition. I'm like, man, the financial metrics have to make sense, but whatever business you're in, if you're like, I can grow by acquiring, let's say 20 clients a year, 50 clients a year, whatever the number is, organically, or I could go buy, and it has to be the right price, right? The deal has to pencil out. I could go buy 300 clients tomorrow. And that's what we've done consistently in all the businesses, is just said, here's what we'll pay to acquire a client organically. Here's our retention rate with that client. And here's what we would go pay the market. And it's just dramatic. And like you said, once you have your people and processes in place, you look at that and you're like, all right, top line of this, profit of this, but we're actually going to drop X percentage more profit to the bottom line because we can get rid of the things that they're doing. So walk me through the financing on that. Did you do like a conventional type of debt structure, SBA, or did you do owner carry, or like, how did you make that work?
Yeah. Okay. So we paid about 2x revenue. That was the price. And we financed it with a ridiculously expensive regular bank loan. It's like 8%, I believe. Amortized over 5 years.
Right? Wow.
It's crazy at 8%. And then I also did a seller carry, a smaller amount in second position. I think I put in like 50 grand of my own cash, and the rest was financed. And even with that ridiculous debt structure, it still cash flowed like at a 2 DSCR. Like the DSCR coverage was like 2 or 2.5, which is like,
that's awesome.
What you get in real estate. The cash flow was just so much greater. The only problem, which was like the source of the majority of my fear doing this deal, is that you're not really buying anything tangible, right? Like when you're buying real estate, you're buying a hard asset. And if things go wrong, you just turn around and you sell the building and then you move on. But with this, you're basically buying pieces of paper signed by other humans. That's what it is, right? It's contracts for property management that can basically be canceled at any minute. So it's a high risk situation if you're getting into an acquisition where the company has a client base that's just like really upset and just disappointed and just ready to jump ship. And that's not something you can really gauge when you do due diligence, because you can't call every single client and tell them, hey, I'm buying your contract out from this other operator. How are things, right? Are you happy with their service? There's no way you can do that. So there was a big unknown there, which really kind of scared me, and I had to get over it. But the cash flow, the way I justified it in my head was, look, the loan is going to get paid off in 5 years. So all I got to do is make it 5 years. And even if the portfolio dwindles down to zero, if I could make it down to 5 years, I paid off that debt, and at least I learned something.
Yeah, for sure. And when we coach folks on the buy side, what I would say is the level of customer service across the board is so low. Right. So that's a big fear, right? We just sold a courier business, which was a tremendous deal for both sides. And the question is like, man, will these clients stay? And my premise is like, well, yeah, if you do a good job, right? If you take care of people, and most of the time you're going to do a better job because you're probably going to use some technology and you're going to be more effective in your communication. You're going to have, processes and things in place. We use EOS for a lot of this. they're going to probably be super excited and recommend more clients. But when we bought one of our insurance businesses, the retention was pretty low for the industry. And we went into it and we were like, okay, here's our goal to get it up to this. We dropped like 3 points of retention, which was fine. We had baked that into the cost. But the reason was they had some really crummy clients. And so we said, actually, we want to lose some of these clients. And so we had to retool and coach the team and say, here's our ideal client. Here's why they're our ideal client. Anybody that's verbally abusing anybody on our team, they can't be a client anymore. Anybody that's coming in and wasting your time and being rude and that sort of thing can't be a client anymore. So we actually dropped 2 points, but then within 6 months had grown. It was basically like 80% retention. Now we're at almost 86% retention. And why? Because we took care of our clients better. And then we said, hey, we actually need to get a much shallower bullseye on the client mix that we want to make sure they're profitable, they're good clients, they're sticky, they care about what we do, right? If they're like, I don't really care what you do, I just want the cheapest, worst thing, you're like, you're probably not a good client.
Do you like what you hear so far? Make sure you never miss an episode by clicking the subscribe button now and check out our website, www.excoadvisors.com. This podcast is made possible by listeners like you. Thank you for your support. Now, back to the show.
So, okay, now you've bought the business. Walk us through that. What would you wish you have done differently, or you wish you knew, or what are some of the learnings that came out of the first, kind of 6 months or so?
So property management is a pretty crappy business. Most property managers really suck, right? So you have to be really bad for a client to leave, because it's so hard to like switch to a different property manager and start from scratch. And then there's the chance that they're going to be really crappy. So a lot of that fear I had about how clients were just going to jump ship is not really true. It's not really valid. It's been 6 months. I haven't lost a single client. I fired one for the reasons that you mentioned before, where it was just low quality and not the type of client that I wanted. But that's something that I hadn't thought of, the quality of client, because I've built my property management business from zero, right? So I've handpicked all of my clients and they've been with me since the beginning. So they're sort of trained already to understand and to believe that we're actually going to do a good job. But what I didn't anticipate was that these clients of the new company had been handheld so much by the previous owner. She was great. We still talk on a daily basis, the seller, because the way we had to position it was, instead of saying that the business was sold, we positioned it like a merger. Even though I'm the one that bought the business. And she stayed on for 6 months, but we basically pretended like we just merged companies. And what I was doing was bringing technology. She didn't have any. She was dealing with paper and everything was in files. There was no technology or process or infrastructure, which she desperately needed. So we made it seem like we were merging. And then she stayed on and clients freaked out. Oh my God, we're going to lose you. Right. She talked to every single one of them. She's been great. She's basically part of the team. And little by little, she's phased out. But what I didn't anticipate was the level of hand-holding that she had been doing to all these clients. I mean, she would get them involved in every little detail, where with my clients here, we just manage the property and we never talk to you. Like, if we're talking to you, it's because there's a problem. And you pay the rent every month, and that's it. We don't really have to talk, right? There's a vacancy. I let you know there's a vacancy. I go and I fill the vacancy. I sign a lease, and I come back to you when the lease is signed, right? Owners don't approve tenants. I approve tenants, right? We're the ones that have the expertise.
Yep.
She was allowing owners to approve tenants. She was allowing owners to do like their own maintenance work. She was allowing to basically get involved, right? In every aspect. So now we come in and these owners are like on top of us. 90 different owners just on top of us. And it was a shocker because there was no way we could have gauged that during due diligence, right? There was no way. Like, you can't dig deep enough to like really see how things were being operated. There's a lot of owners that have only one property. And so they're not very good quality investors. They're not real investors. They're just people with one-off rentals. So you can't really talk to them like if they're investors. You send them the report. They don't really know how to read it. And then they're asking you to explain it 100 times.
Yep, for sure.
But we're trying to get to the bottom of like, how can we make it more hands-off so they're not as involved? And a lot of the cycling through of tenants too, like as the year goes by and tenants move out and new ones move in, then we're able to put in our own with our own lease agreement, with our own everything, and then things just sort of like a little more smooth. But Yeah, it didn't anticipate the quality of the owners and how high maintenance they actually ended up being at the end of the day. So different from my existing clients, which I don't even talk to ever.
Yeah, the style as we coach buy side folks or sell side, really we try to find a core values fit for that marriage. Like, hey, you guys are both going to have totally different styles, but let's see if you have the right core values fit. Every business we've bought has been so dramatically different than the previous owners because we're so systems focused and accountability. And almost every business we buy will lose, it could be small business or bigger business. We'll lose 1 to 2 people or 10 to 20% of the people on the staff because they're just like, yeah, I haven't had anybody ever ask me what I do and have a scorecard and KPIs. And it's like, hey, that's great. You seem like you're doing a great job, but we are going to have some accountability and quarterly setting, rock setting, and annual planning and that sort of thing. But the difference in style is really kind of a thing that you have to eventually like overcome because those clients became clients because they like the style of that owner. And now you're like, hey, I'm the new person. And,
I would argue that they were groomed to like that style.
For sure.
Our style will be better for them and they'll be happy.
100%.
It's just that getting them to accept the change is the hard part. The new system, they won't even remember the way things were before. And that was how having the previous owner stay on board really helped play that out. It was like, look, no, I'm not leaving. We merged. We're going to be adding systems and we'll help you through it. But 6, 7, 8 months in, they've gotten so used to the new system that they don't even remember.
Yeah, 100%. So do you have a story from that process, like a funny story? I'll start with one just to get the juices flowing and let you think about that. But dude, this is, we bought this business. We have a great team. And one of the team members, there's always like 1 or 2 that are just your squeaky wheels, right? It's like you can do everything for them. And eventually you're like, they just have issues, right? They're victim mentality and I'm never going to be able to help them. Well, we had this gal just setting things up on the sales team and really bending over backwards trying to keep her. And eventually she comes to me like 2 months in and she's like, hey, I'm leaving. And I'm like, oh, I'm sorry to hear that. I'm like, we really actually need you right now because we just like got this thing going. Oh no, I got to go to this other place and it's way better opportunity. I'm like, okay, well, we'd like to keep you. So is there a way that we can make this work for you? No. Okay, etc. So she leaves and like 4 months later, she's been working for that person. She gets fired over there and she sues us for unemployment insurance. And I'm like, wait, hold on a second. You resigned from our team. We offered you your job back multiple times. And then you went and worked for somebody else. What? Like, go talk to that guy. That's the person you need to get after. And we just had like so many examples like that were not that funny in the moment, but they are to me now. Cause I'm like, we went before the Colorado group and they're like, yeah, why are we even here? This is not a case. You don't have any claim against this person. Anyways, any funny stories or interesting stories that came out of that acquisition process or onboarding process?
More owner stories. So I have one guy who's got his brother living in one of his properties. The guy never pays rent. He's either late or he just doesn't pay. This is the guy's brother. We can just be like, hey, let's evict him and get a new person. It's every month. It's the same thing. I just got an email today from my employee saying that owner wants to go ahead and just remove that unit from our management agreement because it's like pointless. Like, yes, please. This tenant pops up in our delinquencies list every month and we have to discuss it and it takes time on our call. Like, yes,
yeah,
if we're not going to be collecting rent, it's pointless for him to have a property manager. So we had another guy who had a unit where the bathroom, something happened with the pipes of the toilet and it like flooded the bathroom. And the guy basically opened up like the walls and has like all the pipes and stuff exposed. And he's waiting for an insurance. He's like suing his insurance or something like that to get his money. It's been like a year and he still hasn't fixed the bathroom. And the tenant's just living in there.
Oh my gosh.
But the tenant pays late, like super late every month. And we can't really like tell him anything, right?
Exactly.
Waller situation. So that's another one that shows up on our list. Thankfully, that guy just moved out. Thank God that we give that unit back to the owner, fix it, and then come back to us when you're done. So that was one. Then I had another owner who, this is the one that we fired. We had one property that we had listed for rent for him, and we had one tenant that we were about to approve that had a dog, and it was a service animal. And you're not allowed to say no to service animal tenants. So he told us to reject the tenant. So basically, violate fair housing. Great. So we reject that tenant, and my employee did it without telling me that it was a service animal. If I had known, I would have been like, no. Then she finds them another couple, 700 something credit score. They've made really good money, like perfect. Like you never see that in these like kind of lower income properties. No, I'm not going to approve them, the owner. Like he wanted to see the application. And we sent him the application. He goes, no, I'm not going to approve them. And we're like, you have to give a reason. You cannot reject somebody for no reason. That's another violation of fair housing. And then I called the guy and he had like this woman in the background that was like screaming and telling him things, like clearly somebody who knew more than I did about rentals. And finally I told him, I was like, I can't help you. Like, that's it. Take this property back. I'm sorry. I brought you 2 candidates. You said no.
Yeah.
You're making me violate Fair Housing Act. Like, but it's these people, they just make up the rules and they think that they can just do whatever they want. And I'm trying to operate within like legal parameters and what is ethical and the right way to do things and being a good human. And most people just, they don't care. You do also have a lot of people who overpaid for properties in the last year or two, especially I'm in Florida, and now they can't cash flow. So like the rental market has kind of slowed and their mortgage payments are high and they can't cash flow. And then they're telling me I need to make minimum $1,900 a month on this property when the comps are at $1,400. And I'm like, nobody's going to rent this place because look at, there's 17 other houses for $1,400. Why would anybody look at yours? And they're like, no, it has to be 1,900. You know, I can't.
Yeah, it's frustrating.
But yeah.
So let me ask you.
Never a dull moment.
Oh, never a dull moment, especially in real estate. So we usually go about 30 minutes. We're almost there. What are some tools, books, mindsets? Like, what are some things that you can give to our listeners that'll just help them along their journey? Like, what are some of the things that you've been learning or thinking, et cetera, recently?
On the acquisition side, if you're coming from the real estate side where it's so black and white to underwrite a deal, like it either cash flow or not, it's so different, right? Because there's so many different things you can do to generate revenue. If you're getting into an acquisition that is a solid company that's been around for years, it's okay to overpay a little bit, because if you do things right and you follow the model that has worked for years and years, you'll make the money back. So like if you're feeling fear over doing the deal because you're getting stuck on like the numbers, which I tend to get stuck on, like we know that at the end of the day, nothing ever ends up being how you perform at it. As long as like the fundamentals still make sense, then you can just get over the fear and just take action, and then you'll be happy you did it in the end. It's actually difficult to fail. Like,
yeah, I agree with that.
To fail at business.
Yeah. One of the stats, and it was in a bunch of courses, including Cody Sanchez's and some of the other, I think like SBA loans are like 97 or 98% success rate. And like a lot of people that get these loans are not that good at what they do. Like, just to be frank, like I know a lot of folks and I'm like, ooh, you don't have any processes. You're kind of running around. You don't know basic business procedures or principles. Yeah, most of them. And yet 98% of them or 97% of them succeed. And so we do a lot of coaching on the front end, like, hey, just start with EOS, right? Read traction. Let us coach you on some basic frameworks for how you set out your meeting cadence and your scorecards, and, you know, how do you coach your team, that sort of thing. If you just did 20% of that book and that process, you would be more successful than most businesses out there.
You have the mindset when most people don't. So even if you implemented 20% with the mindset, no one has the same mindset.
100%. What, anything else, man, like good books or any tools or things that have just come up the past quarter that have been impactful to you or your family or the business?
What's that book? The one that's all about acquisitions?
Buy Then Build.
Buy Then Build. That's a good one. Fundamentals book, like just to understand kind of the structure of buying businesses and just kind of sticking with what you're good at, right? For me, we're good at property management because we have to have it for our properties. So to just keep acquiring property management businesses and grow that is more natural. What you're doing is a little bit scary for me, where you're buying businesses in very different verticals because you're having to kind of, you know, reinvent the wheel every time you do a new deal, which is scary, at least for me. Right now,
but the thing is, after we did it a bunch, we realized it's like 3 things: people, processes, and profitability. I mean, you can break that into a million other things, and EOS has a bunch of different like segments, but the reality is we have really good processes already. So we know we have a back office that can roll in a lot of the things, all the back office, right? Like we know we can handle your HR, your payroll, your accounting. Then it just becomes finding the right who, right? That who, not how concept that has an expertise in that space. So like this plumbing company we're going to buy, we're partnering with a guy who's been in construction for 25 years. right? So he is the who that I know is going to manage those projects, and we're going to manage everything else, the culture, the people, the accountability, the scorecards, all that. And so to me, it's like that business is going to look very similar to our real estate business, is going to look very similar to the financial advisory business or the insurance business. Because once you've done 2 or 3 acquisitions, you're like, oh, it's actually like just these 12 things or whatever that we're going to roll in. And then within 9 months, you have a really good handle on it. And then within 18 months, you're like, now everybody is kind of in the matrix, that we've built. I have stopped almost looking at like segments or industries, and we just look purely at the financials. We're like, hey, is this a really good, profitable, long-term business that we think we can have upside in? Oh, it's this kind of business. Oh, that's weird. I didn't even think we would want to buy that kind of business, but it's like, it works for.
It's looking like it's a lot of trade businesses.
So we focus on white collar service and then blue collar service. And there's obviously like our underwriting model that thinks about like, all right, what are the jobs AI is going to take over? And that's one of the reasons I love plumbing, HVAC, et cetera. Like first of all, we love the blue collar segment. We think there's a lot of like juice to squeeze out of just personal development coaching and helping those people achieve a greater life, an exceptional life with some of the tools we've created. But then also it's like, that's a segment that's going to be around forever, and it's growing, right? There's a track for master plumbers, master electricians. There's really good schools now. The stigma is going away, right? Yeah. Those guys are making 150 to 200 grand a year now, guys and gals. So anyways, it's fascinating. Well, thanks, man. This has been awesome. I appreciate the catch up and the wisdom and the journey. We'll catch up again down the road as you've kind of onboarded this and had more time, but thanks for joining me, Carlos.
Yeah, it's a pleasure. Thanks for having me. You're the man.
You too.
Thanks for joining us this week on the Exceptional Companies Podcast. Make sure to subscribe to the show on iTunes, Spotify, YouTube, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes, or if you'd simply tell a friend about the show, that would help us out too. If you liked this show, please reach out through our website, www.excoadvisors.com, for free tools to order a copy of Selling Main Street, or to sign up for our free webinar on how to sell your Main Street business.